Hi, welcome back to the USDT Masters course where we teach you about time precision trading. Yes, so this is a strategy that you can use in any pair. It works with any pair, and it doesn't matter. But I focused it a lot on USDT. So today we'll be learning about key levels. The previous videos we learned about weekly cycles, we learned about daily cycles. Please make sure you go back, you study those, because everything adds up to make one of the best trading strategies that can change your game forever. So let's quickly jump into the lesson. Hi there. So today's chapter, as you can see, we're on chapter 2 and we'll be learning about key levels. And again, make sure you get this book so that you can have an understanding of what I'm talking about and study this book. And I'm 100% sure, very sure that it's going to improve your trading way than you could have ever imagined. So today we'll be looking at key levels. So let me just quickly scroll through this chapter. I won't read everything, but let's look at the first paragraph. So trading is a complex field that requires keen understanding of various strategies and tools to ensure success. Among these tools, understanding key levels is paramount, and these levels serve as integral reference points for traders. So these key levels are gonna either act as a resistance or they're gonna act as a support. So this chapter is just based on you. How am I going to use this strategy? Because this strategy is not gonna work like every single day. That's something I can be sure of. It's not like something you're gonna say, I'm gonna enter on Monday, I'm gonna enter on Tuesday, on Thursday, or every day at 4 o'clock. No, I'm sorry. But this strategy might even work once in a month. But the probability of this strategy working is very high. Or it can even work once in a week. So we don't know. Or maybe once in a day. But or maybe. So I won't say this is a strategy that you're going to use every single day. But this is a strategy that there's a very high probability chance of winning. And once you have an understanding of this strategy, you can have at least one good entry each and every single week or each and every month, a good, excellent entry that can change your account, that can even double your account, that can, you'll see. So let's keep chapter and paragraph 2, paragraph 3. Okay, let's look at paragraph 3, the last two sentences. So through meticulous observation of the USDT, it became evident that there are 4 dominant price levels that typically act as this capacity. So there's only 4 key levels on USDT that can act as either a resistance or a support. Only 4 key levels. Only 4. And those 4 key levels I wrote them there. As you can see, is the 1000, the 750, the 550, and the 250. Maybe you don't understand what I'm talking about there. But if we scroll a bit down to the last paragraph where it wrote examples of key levels, that's where I explain everything what it means. From the USDT data, there are 4 distinct key levels. The first key level corresponds to the whole thousands. What I mean when I say whole thousands, I'm just meaning that like 42,000 or 32,000 or 41,000. So any number as long as it's 1,000. And when I say 250, so I mean the last 3 digits of the price should be 250. So like 41,250, 42,250. 43,250. So you see, the reason I say it might take long for you for entry to get entries every single day, because it takes time obviously for the price to reach that price level. It's gonna take a lot of time. So, but at least there are 4, so it increases your chances of getting entry. And then the 550, Again, you just look at the last three digits. And then the 750, same thing. You look at the last three digits. So I'm going to end it there, and we're going to go to the real charts, and I'm going to explain how to use key levels. It's a very, very simple strategy anyone can use, but I'm not going to explain it in detail. I say again, make sure you get the book. The book explains it more in detail on how to use it, but I'll just touch very important points that are going to help you in your trading. So yeah, let's go. Yes, so we are here looking at the chart. So I drew horizontal red lines here on the chart, and these are known as key levels. Easy as that. So what I drew here is key levels. So if you check the price level on the right there, see it's 41,550. That's my key level. 41,750. That's my key level. 42,000. That's my key level. 42,250. That's my key level. 42,550. That's my key level. See, all the key levels are there. So that's what I mean when I say key level. You just write it. So you just insert it, you double click it, and then you say coordinates, and you write that number 42550. That's how I did with all of them. Make sure that it's accurate, that it's perfectly there. And yes, the broker does matter. So you can't be using any broker, because you're going to see that at some brokers, the 250 could be there, 250 could be there. It's going to be a mess. So I prefer that you use either Owanda, you use capital.com. Not sure about Blackpool, not sure. But you can check. You can just compare them and see where 250, these price levels act properly as a resistance and a support. So just make sure you check, and just use it, and any broker can see it doesn't work. I'm saying it again. Make sure that you use either capital.com or Wanda. I'm not sure fully about Blackpool, because I use mostly, but a lot, capital.com for my analyzing. So yeah. So let's continue. So what I'm going to teach you, as I said, I'm going to only show you one thing. But if you want to learn more in detail on how the strategy works, make sure you also get the book so you can study and learn it, on your own properly. Yes. So let's go. So the first one that I'm going to teach you is called the first time touch. So if market has been on a downtrend, like been down there, it's been down, it's been here, playing right here, always going down, and then it comes here after a very long time, after weeks, months, and then finally it comes back here. It's gonna act as a resistance for sales. That's called the first touch. And then if it, mostly the second touch, it breaks the second touch, and then maybe it comes back, then it breaks way, and then it comes here. This is the first time after a very long time, it comes back here. It's gonna act as a resistance, and then higher chance is gonna break again. If it comes for the second time, very high chance is gonna break, and then resist there, because it came there for the first time. Then it breaks maybe there. Then because it's coming there for the second time, very high chance is gonna break. But it's coming there for the first time, it's gonna reject. Coming there for the second time, might break. And then coming there for the second time, might break. Coming there for the first time, well, reject. So if it's coming for the first time to reject a key level, it's gonna act as a resistance or a support. If it's coming there for the first time after a very long time, so not like in a period of a week, like after a very long time. So, but let me show you. Let's check. So I already did it, and I wrote also first time. So if you can check here, market has been selling. It's not. Oh, it did. Yeah, I like it. I didn't see this. I didn't see it. So we see market has been selling. It's been like down there, down there, and it came to a key level after a very long time. It came to the key level. As you can see, this key level is called what? The 550. After a very long time, it came to that key level. So if it comes to a key level after a very long time, after a particular time, it comes to a key level, it's going to act as a resistance. We see retesting there. And then if it comes for the second time, there's a very high chance it's going to break. But we see that it failed to go above. So yeah, that created a double top there and information. Bah, it sold. Bah. And then we see here, it came in a way for the first time, in a way, because it's still after a very long period. See, it was below for a very long period. And then finally it came back again. It's going to act as a resistance. But yeah, it was not that strong. And then now, following day, it came again. Very higher chances going to break. That's what I mean. Then it broke. But we see it came to this key level. And then it didn't come after a very long time. It did not come to this level. It was a new level. Then what's going to happen? It's going to act as a resistance. Market went down. And then it came for the second time. Market broke. See? And then it sold. See, now this thing is not fully acting as a resistance. Why? Because it's already been retested there for the first time. And then even this key level, we see it came to retest. And then this key level, it came for the first time. After a very long time, it came. And then what did it do? It resisted. And then it went for buys, came for the second time. You see it's no more that strong, but it did act as a support here and then like that. But we see we have another key level at the top there, and then we see market respecting it because it came for the what? For the first time. We saw it respecting it, coming back, creating information, then giving us strong sells. But we have another key level above there. So we see it's been selling, respecting all the key levels. This was the other key level, and we see it breaking but closing below and then giving us a strong sell back to the key level again. So we have if we have another key level above here, 750, that's also gonna act as a resistance, guys. This is gonna act again. If we come back there, if we come there, you're gonna enter yourselves. Why? Because we've never came to this key level ever. And then even if we have another key level above there, which is the 43,000, it's gonna act as a resistance, and we're gonna sell. Understand? But even the lower ones, if market sells to come to the lower ones that have not been retested after a long period of time, preferably like a week. If we haven't retested that key level in like weeks, like 2-3 weeks or a month, we can consider that key level again for a first time retest. So that is why I say this strategy, you might not find entries each and every single day, because when are we gonna come back? When are we gonna come here? I also don't know, like, when are we gonna come there for an entry? When will we come there for an entry? But what we know, market won't just break and it will have a tough time to break this level. It's gonna sell a bit before it comes back to retest it, before it comes to break it. So yes. So thank you guys. I hope you learned a lot about key levels. Make sure watch all of the videos, and then if you have any questions you don't understand, comment. You can ask. You can check me on Instagram. The link is there. You can text me on Instagram. You can join the group on USDT Masters on Telegram. So make sure we're a community, we're learning together. So yeah, next chapter will be chapter 3, and we'll be looking at what is known as zones. I know many people will call fair value gaps zones, but no, I'm not doing that. I'm really doing zones based on time precision trading. So it's gonna be something different, something different, something new, something fresh, yeah, it's nice to learn something fresh, yeah. But yeah, thank you guys, thank you for watching. Yeah.